Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary safe wheel for free. And so let's get started here. I want to make sure you guys hear me okay. Also, be sure to uh, put in the chat that you can hear me. Also, I want to get to your questions. So make sure that you ask questions early on in the broadcast. A lot of times questions kind of come in at the last second and I kind of miss those. So let's get those in there. Charles, Simon, LaDude, what's going on? Some guy, how you doing? Good morning or good afternoon. Okay, good. You guys hear me okay? Thank you. Okay, let's get started here with what I usually start with is the earnings edge. You guys can see that on my screen. You can see my account. Can't see my net lick, so I'll put that on there. That's why I always want to show my net liquidation because a lot of people don't show their net liquidation. And that's one of the things that I like to do because that's reality. And I think people like reality. So 11,273. What happened last week with the earnings edge? Well, let's bring the spreadsheet over here. It's easier to track things on a spreadsheet. NVIDIA. I traded NVIDIA, made 591. So you can see we got 25 wins, 22 losses, and 8 break even. So I'm breaking above that 50-50 win rate, and that's because I'm taking profits a little earlier with a little different profit taking method. I've changed the course or the earnings edge a little bit, and there's basically 3 different methods that you can use to take profits. I'm using a certain method. So what's happening is I'm getting a higher win rate, and my average win is coming down a little bit. I still have a nice average win of 774 versus 467 of a loss. So the average win is still much higher, but it over time it might get a little bit lower. But I expect to see my win rate, how many wins I have versus losses, increase. And what was that amount? Let's move this over here. What's the account net lick? 10,273. Let's put that in there. I'm sorry, was it 10 or 11? I think it was 11. 11,273. 11,273. What is the market? It just keeps going up again. It's going up without any volatility. I don't really like that. I don't mind it going up. I just like volatility. SPY 531.17. 531.17. So the market's up 11.75, almost 12% this year to date, doing quite well. The earnings edge is up 17%, outperforming there, but on a risk-adjusted basis, probably the S&P is outperforming the earnings edge. But you can see how well the earnings edge is doing overall since I started trading it live. I didn't actually make the trades live, but I've actually shown you my P&L live since January 2022, and it's up 125%. Where the S&P since January 2022 is only up 12%. So it's not, S&P hasn't done so well in the last couple of years. Okay, let's get into the Premier level 5. Let's talk about that for a minute. On the Premier level 5, I am trading with Interactive Brokers. So we can see my account here. I can't show you the whole screen because it'll show you my account number. So I'll just refresh this here. So 33. Okay. I'll refresh it again. I don't know why it's failed to fetch data, but I can see it there. 33,797. You can see it. That's a proper 33,797. Let's put that in the spreadsheet. 33,797. It's down some. And again, the reason for that is the market is just going up without any volatility at all. Record here, 24 and 9, 11 break evens. I've got 2 open trades right now. And this is good on a risk-adjusted basis, about 1/3 the drawdowns of the S&P. And I wish I would have started this on January 1st, 2022, but I hadn't developed, hadn't done the back testing and forward testing it. So I started on April 8th, 2022. See the results. S&P is up 30% since then. So that little 4-month period there makes a big difference. If we multiply this times 3, PL5 may be barely outperforming, about break even with it because of 1/3 of drawdown. So you have to look at the risk adjusted return. So nominally underperforming here since April 8th of 2022. So that's the PL5. One good thing about the PL5 is that the drawdowns are just super low. You're down 3.76 year to date, and that's the largest drawdown I've had with this system. And so it's nice that we're going to come out of that little trough, and we get some volatility going, and we'll come out of it. Okay, that's the PL5. Now we're on the safe wheel. What's going on with the safe wheel? Let's go into the safe wheel account. All right, so you can see here that I've only traded DKNG and LI, and year to date about $128. Let's look at the spreadsheet, I guess. Let's see, net lick 6465. Let's put that in there. 6465. Okay, so some having problems with my audio. Okay, whether it's better now, Jeff. Okay. Sometimes these microphones they have their own special little setup. Okay. Where was I? I was putting in this number, which I forgot. 6472. 6472. So it's up a little bit. Safe Wheel's at just up 1% this year. LI hasn't been doing too well for me, but I'm kind of stubborn, and I'm going to prove that I can make money with LI because it doesn't matter what stock you're using as long as it fits the criteria for the Safe Wheel. And you can see overall the Safe Wheel's done 30% since the beginning of January 2022, vastly outperforming the S&P. So this thing I've given away for free, vastly outperforming the S&P. Even on a risk-adjusted basis, this thing has about half the drawdowns. So it's really outperforming. And been giving this away, showing you guys, making all my trades right in front of you on this one. So I hope you like it. So let's see what's going on now. Like I said, showed my net lick. And what is happening with this thing? I've got 100 shares. And look at LA, down 14% this morning. Not something you want to see when you're in the wheel strategy, right? But when you're in the safe wheel, that's no big deal. Actually, I'm up today. So let's take a look at what I need to do here. I've got my $24 put. So the question is on this put, it's got 123 days left. Is it under 100 days left? No, so it's good. And then the other question is it within 70% of the actual price? Well, the price is actually lower. So it's obviously within 70% of the price. So yeah, we're trading under my put hedge here, which is, that's a good thing. I like that. Okay, and second thing is I have this call, this $35 call to protect this put hedge. And I paid $6 for it. It's not worth anything now. And I buy those on Fridays at the getting close to the Friday close is when I buy these calls. I just pay $5 or $6 for them. Okay, so that's good. Got my hedges. My hedges are good. So now I'm going to look at the traditional wheel. This price that I got in at is $28.50. So I'm going to try to sell a covered call at $28.50. I don't think that's going to be available. Let's take a look here. I'm going to look to sell my covered call in the nearest expiration cycle, the one that expires at the end of the week, and $28.50, and I can only get 2 cents or not even that. I want to get at least, well, I want to get at least 28 cents here, and I cannot get anything close to that, right? So what should I do? Kind of stuck, right? This is when most people are just stuck in the wheel and they can do nothing. And so now their capital is just sitting there and it's not working for them, right? They're long and they're just sitting there and they're losing money unrealized. Sometimes they don't realize the loss, but they're just sitting there and their capital's not working for them. So what am I going to do? Well, I've already planned for this scenario, and what I'm going to do is add another tranche or another layer. I'm going to risk another 100 shares so I can maximize my capital, and I'm only going to risk 200 shares. This is the maximum thing I'm going to do. I'm going to do this one more time. I'm going to trade the wheel one more time because I'm long 300, in essence, 300 shares with my put. So I can afford to be, I'm sorry, I'm short 300 shares with my put. So I can afford to be long 200 shares. So I'm going to go ahead and sell another put. I'm going to open up a new tier. I want to get at least 21.50. I want to get at least 21 cents for it. Here, I can't do the 20. I want to get as far out of the money as I can, of course. I can't do the 20. I can't get enough premium. I can get to 20.50. I can get enough premium for that one. But typically what I like to do is find where I can get the most premium and then go one back, as long as I'm still out of the money, which I am. So I'm going to sell this 21. And I'm going to do one of those, which would equal 100 shares. I'm going to sell one put and collect some premium here. Mid price 48. I'll just go in at 48. Okay, filled right away. So now I've got my second tier on. I've got my put hedge, which is really working well for me at $440. Collected some more premium. Isn't that the key? Isn't that what you want the wheel to do for you? Is you want to continue to collect premium, right? Okay, so that's my trade for the safe wheel. Pretty simple. Let me open up the questions over here. All right, Will here. Good afternoon, Jeff. I guess afternoon. It's morning here in California. Will, looks like earnings hit LI today. Oh, okay, so it was earnings. So I don't pay much attention to that. I don't pay much attention to direction. All right, let's see. Earnings. Let's look at the chart. Oh, I had this chart. Let me get this chart set up right. Time frame. Let's go with daily. What's this? Day. And let's go. Okay, here. Are we in the earnings? Yeah, the earnings looks like they had the what's today? The 20th. Okay, so they did everything before the market, and it looks like people didn't like it. Yeah, so we kind of dropped pretty good there. Maybe that's why there was some pretty good premium last week available. I always like it when there's a lot of premium. Some guy says on Earnings Edge, having a higher win rate but lower profit per win may be detrimental in the long run. That's true. It's possible, but I've had students in the course that have been using this newer method, and they were outperforming me, and I like the method too because it's more black and white as far as it's kind of a 3-tier system. You take the second day, you take a higher profit, and then the third day you take a medium profit, and then the fourth day you take the lowest profit, and then the fifth day you exit. I thought that I had my administrator had put out a video that explained that, but I guess you haven't got it. So shoot me an email or some type of something in Circle there, and I'll make sure that that video gets posted because I created a video on the 3 ways to take profit with Earnings Edge, so I updated the course. I just wasn't sure if you guys got that yet. Will says LI dropped so low this morning that our put hedge is making us profits. That's right. Yep. Okay, and then see the sound was breaking up, but Jeff says it's better now. So hopefully it's working now. Will, wondering, because such a hard drop in LI today, do you think you should buy a new $5 call at today's prices for better protection? No, I think my protection that I purchased before is good enough. Yeah, I know it's way out there, but I already spent my $5. $35 call is fine. I'm really looking for that thing to shoot up, go to 50 or something, a takeover bid or something, go to 50 or $100. That's what I'm worried about. Will, since the underlying value is under $20, doesn't seem to meet the filter for the safe wheel, should that mean that we should never sell a put below 20? Oh, no, not. If you're in the trade, like I'm in it, like I own shares. So I'm going to continue to trade it when it's below 20 or above 40. I'm going to continue to trade it until I either get called away or, one of the rules takes me totally out of the trade. Takes really my put hedge out of the trade. Once the put hedge is taken out of the trade, that's when you start over. And I don't exit the trade. I don't exit the LI. I don't exit the underlying based on the price. I only enter based on the price. But then once I exit completely, something tells me to exit all these positions completely. Then when I go back in, if LI is below 20, then I won't open it. I hope that makes sense. Did I answer all your questions? Yeah. Okay. And Dude, what do you think about delta neutral trading? Considering that the S&P makes 10% a year, is it really the way to go? As I'm practicing, so many call spreads are being wiped out. Delta neutral trading is good. I'm interested in gamma neutral trading, but delta neutral trading is kind of part of that. As long as I can collect enough premium and mine an edge that outperforms the S&P over the long haul, I'll do that. Recently, I haven't been able to mine the edge and outperform the S&P, over the last 6 months. The S&P is up like 25-30% over the last 6 months. So the edge that I'm mining, it's not giving me enough to outperform that particular time period. But over the long haul, when the market goes down or sideways, I'm going to catch up, right? I'm going to mine that edge. And I'm not going to have a lot of drawdowns along the way. That's kind of one of the things I really like, is I don't like drawdowns, so I like to have a system with low drawdowns. And yeah, selling call spreads. I don't sell call spreads. Selling call spreads is like a traditional trade structure. And when you trade traditional trade structures, they get beat by direction. They don't mine the edge. They can't. Direction is more important than the edge. In other words, direction overpowers the edge. When you have a traditional trade structure, those traditional trade structures, they're all directional. They don't really mine the edge very well. Direction overpowers them. So you want to have a more advanced trade structure so you can properly mine the edge without direction overpowering you. So I don't sell call spreads. Will, with meme stocks back in the news last week, what do you think about GME for the safe wheel? I don't like that much volatility in my safe wheel. I try to keep it reasonable. So that's really the answer to that. I need to have a better answer as far as quantifying what I'm talking about, but off the top of my head, I don't have the numbers to tell you why I don't like it that way. I just ran the numbers. I just know in my head, don't use stocks that are too volatile. I can't think of the exact numbers behind that right now, but I just already know the answer to that. Last historical quote of real P&L. Give me a real P&L or give me death. Patrick Henry. Okay. Well, uh, Zeddy Zed. Hello. I have a question. Is your PL5 Masterclass a one-time cost or a subscription? It's a one-time cost. I'd probably be launching something here before the end of the quarter. So that's kind of the plan. It's not like set in stone or anything. Some guy just checked the EE course, couldn't find the revised exit strategy. Okay. I'm going to write that down so I don't forget to add that particular EE video to the course. Thanks for letting me know. And Shovel, being probably the 20th person to put a comment in, says that he's first. Okay. Let's come here. Isn't the put hedge supposed to be less than 70% of the share price? So isn't that $15? So it's got to be within 70%. So if the stock is trading at $100, I want to be close by 70%. So I want to be at least $70. If I'm at $60, it means I'm not close enough. My hedge isn't close enough to do the job. Now, right now, my hedge is in the money, so it's super way doing its job. It's way close, right? It's really good, if that makes sense. So it's kind of the opposite of what you're thinking there. Cool Carl has the flag out. Actually, people think I'm just showing the flag, but it's actually Wall Street. It's the Wall Street thing that I'm trying to show. See that? I might lower that. I was thinking about lowering that so people think it's not. I mean, not that I'm against the American flag, but it's just I'm more trying to show you the Wall Street picture than I am the flag that just kind of works out that way. Ladude says, do you use only these 3 strategies? No. I have another strategy that I'm using that is going to be coming out pretty soon, but I'm only going to make it available to my current PL5 students on the initial launch, and it is called the duck strategy. That's going to be coming out shortly. So I do have 4 strategies that I trade. In my large account, I trade the PL5 and I trade the duck. So that's when I have all my money on the line there. That's where I trade the PL5 and this newer strategy called the duck. And I have my smaller accounts where I trade the Earnings Edge. Earnings Edge is relatively risky, and then I have my Safe Wheel. Safe Wheel is doing really well. It has the potential to have some drawdowns more than I am very conservative, so that's why I don't have a lot of money put on the Safe Wheel. Yeah, but looking at it, I kind of wish I did. Right, it's up 30%. Sebastian says the duck can't wait. Yeah, Sebastian's one of my PL5 guys, so he's going to be able to get access to that. Steve-O says quack. Yeah, it looks like a duck, so I just called it that. They can beginners, people who don't really know anything about options, learn your trading process, set up and be profitable. Yes, and I have recently created a really good options course. I mean, I feel like it's the best beginners options course out there, and I haven't even released it yet. It's going to be new. It's going to be part of my new program when I go out there and actually start advertising. I haven't advertised before. This is the only way that people know about me. But I might start doing ads. Actually, I'm going to start doing ads. And when I do, I'm going to make that particular uh, options course available. That options course is excellent. It's really good. I used to tell people to go to Tasty Trade. Now I'm not saying go to Tasty Trade. Get that course, get that beginner's course that I put together. It's really good. It's solid. And Zetti says this is in regard to the PL5. Yeah. So if you don't know anything about options, you want to. I have all the steps. I'm going to have it all lined out. When I start advertising, which will come up, I don't know, in the next couple months. Anyone that kind of goes through that advertising funnel, right? They'll be able to have access to, if they don't know anything about options, I'm going to take them all the way through from beginning to end. So, and if you, once I release that stuff, remind me if I don't give it access to you guys. It'll be probably part of when I make these videos, there's going to be a link in the description like there is now. And I'm sure I'm going to make that particular, when I do my advertisements, I'm going to make that link also in this. So you guys will have access to that. And less is more says everyone hit that like button to support the program. Yes, I appreciate that. See, because I don't have any kind of form of advertising at all except for these live streams and some of the videos that I make, of course, my YouTube channel. But hitting the like button helps out a lot. I think once I get that course up and going, the beginner's course, I really don't think there's anywhere that anyone should go. They can just be right here, Real P&L, and learn everything they need to know from beginning to end about trading options. And I'm not saying that I know, you wouldn't learn some stuff elsewhere, but I'm just saying, like, you're going to get the bottom. You're going to start from the bottom and work your way all the way up to the top, all the way up into the second order Greeks. So yeah, I got some good stuff coming up. Ladude, is the safe wheel the most basic, easy strategy for beginners? It's good for small portfolios, right? Is it the best for beginners? I think it is. There might be easier stuff to do. As far as if you're a beginner, the wheel might be a little bit heavy. So there might be some stuff that you might, sell covered calls a little bit. I'm not saying that's when you very first start out and you start doing these traditional options trades. I'm not saying you're going to make money at them. You can make money. You might lose money. But that's kind of where you start out because you kind of need to know those basics before you get into something like the wheel. But yeah, definitely the wheel is maybe just right at the beginning of the intermediate level. It's not really a beginner thing, but right at the beginner, you're starting to be an intermediate trader. It's right there at the beginning. The wheel, the safe wheel is a little more complicated than the traditional wheel, so more of an intermediate thing. But yeah, definitely, I would say learning the safe wheel would be a step of making your way up to more advanced trading. And it's good for small portfolios. Sure. I mean, some people might want to use larger portfolios with the system if if their risk tolerance is higher than mine. I would say most people's risk tolerance is probably higher than mine. So yeah, the wheel or the safe wheel would be really good for them, even using a little more capital. Okay, I don't see any more questions or comments. So what I'm going to say in parting here is, if the P&L is not real, what else are they trying to conceal? I'll be back next week.